Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at New Horizon Aircraft.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you trade stocks, crypto, forex, gold, or indices and want clearer buy and sell signals, you can check out VIP indicators through my link below. Grow $100 to $10K with VIP indicators. VIP Indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate. The tools are designed to help traders spot possible setups faster and trade with more confidence. But please remember, trading is risky. No indicator can guarantee profits, and growing $100 into $10 is not guaranteed. Use these tools for education and analysis only. Manage your risk carefully, do your own research, and never trade money you cannot afford to lose. This is an affiliate link, so I may earn a commission if you use it at no extra cost to you.
So imagine you're buying a stock, right? And this company hasn't sold a single product.
Yeah.
Like zero. They have deeply negative profit margins.
Yeah.
And they're burning through literally millions of dollars every single quarter just to keep the lights on.
Yeah, it sounds like a nightmare, honestly.
It does. But here's the catch. It is up an astonishing 385% over the last 12 months.
Wow.
Right. So welcome to the wildly volatile reality of New Horizon Aircraft. Today, we're really synthesizing a stack of recent earnings reports, independent engineering audits, technical blueprints.
The heavy stuff.
Yeah, the really dense stuff. Just to answer one critical question. Is this company engineering a revolutionary leap in aviation? Or are we just looking at another capital-burning money pit? Because honestly, looking at this profile, it feels like the broader market is trying to price the probability of a massive technological breakthrough in how we fly, but it's like really struggling with the math.
It is, yeah. It's a massive engineering puzzle. And you're right, it is so easy to look at those massive violent price swings and immediately write the whole thing off as just another speculative retail frenzy.
Exactly, just meme stock stuff.
Right, but underneath that noise, you actually have a really compelling, albeit modest, wager on a highly challenging engineering concept. I mean, the aviation world is at this massive inflection point right now. The market isn't just throwing money at nothing here. It's placing a very specific, calculated bet on a transitional technology that could, redefine short-haul flight entirely.
Exactly, but it's a bet that needs a lot of context before anyone, just clicks buy. All right, let's move into the wealth-building context.
So when you are looking at building out the growth-focused portion of a portfolio, New Horizon represents this really unique asymmetric play on the advanced air mobility sector, or AAM as it's often called.
AAM.
Yeah. And this is essentially the new frontier of aviation aimed at completely revolutionizing short-distance air travel, regional logistics, and emergency services.
It feels to me like looking at this, like we're looking at a clinical stage biotech stock.
Oh, that's a good way to put it.
Right. Because when you're building long-term wealth, you usually look for the safety nets. Consistent cash flow, quarterly dividends, and established market share.
And they have none of that.
Literally none of those things. But just like a biotech company in, say, phase 2 clinical trials, they don't have revenue. They just have a massive cash burn rate and promising scientific data.
Exactly.
But if that experimental drug, or in this case, their proprietary hybrid aircraft, gets regulatory approval from aviation authorities, the intellectual property is certainly worth billions. You aren't buying a multiple of their current revenue. You're buying a stake in their future market monopoly before that technological moat is fully understood.
Yeah, before it's priced in by the broader market. That is the perfect analogy. You are buying the intellectual property and the engineering pipeline, and their specific moat is incredibly relevant right now. It's their hybrid electric architecture.
Okay, hybrid electric.
Yeah, because the broader context here is that almost all of their major, heavily funded competitors in this AM space, they're trying to build pure electric vertical takeoff and landing aircraft.
The EVP.
Right, the eVTOLs.
Yeah.
And those pure electric competitors are, they're basically running face first into the brutal laws of physics.
Yeah.
Battery density is fundamentally failing pure electric aviation right now.
Let's unpack the physics of that for a second, because it's the core of the whole bullish thesis here.
Oh, definitely.
To lift an aircraft straight up into the air, you need immense thrust. Vertical lift requires fighting gravity entirely with raw engine power. And doing that using heavy lithium-ion batteries, it drains power in a matter of minutes.
Just immediately.
Right, the weight-to-thrust ratio becomes this vicious, inescapable cycle. Like, to fly further, you need to add more batteries, right?
But more batteries make the aircraft significantly heavier?
Exactly.
Right.
Which means you need more power to lift it, which means you need even more batteries.
Yeah, the physics just trap you in a corner. So pure electric aircraft end up with severely restricted operational ranges and practically zero cargo capacity because the heavy battery packs just eat up the entire weight allowance.
Right.
But New Horizon, they bypass that limitation completely by using a hybrid electric system.
Like a hybrid car.
Sort of, yeah.
Yeah.
They use a gas engine to generate electricity in flight, which keeps a much smaller, lighter battery bank charged. It's a pragmatic, immediate bridge. It gives them a practical, extended operational range using today's existing technology, rather than waiting like a decade for some magical leap in battery chemistry that might never arrive. Now let's look at the fundamentals.
And this is where the extreme caution really has to kick in, because the financial reality of aerospace development is just utterly unforgiving.
It's brutal.
As we established, revenue is zero. If we dive into their recent Q3 report, this is for the period ending February 28, 2026. The net loss was about $6.9 million.
Wow.
Yeah, and looking over the trailing year, the annual net loss sits around 33 million Canadian dollars.
That's a lot of cash to burn.
Free cash flow is deeply, deeply negative. They're literally burning millions of dollars just to bend metal and build a physical machine.
Well, it is an intensely capital-intensive endeavor, right? Getting a novel aircraft through Transport Canada or the FAA certification process isn't just about building the plane.
Yeah.
It's about paying for thousands of hours of ground testing, destructive materials testing, software validation. All of that happens before the wheels ever leave the runway, and every single one of those regulatory steps burns cash at an alarming rate.
Which brings us to, honestly, the most important metric for a pre-revenue company, the runway.
Yes.
We know they're burning cash, but how many months of survival does their balance sheet actually buy them as they head into this expensive prototype testing phase?
Yeah.
Like, let's do the math on that 6.9 million quarterly burn.
Right, and that's the crucial silver lining here. They recently fortified that balance sheet significantly. As of that Q3 report, they had $20 million in cash.
Okay, that's solid.
But more importantly, they just closed a registered direct offering on May 11th, raising roughly $19.9 million US dollars by selling over 9.2 million shares at $2.15 each.
Wow, so almost 40 million total.
Exactly. And in the context of aerospace R&D, that capital injection is the difference between life and death. If you map that nearly 40 million in combined capital against their current burn rate, it officially extends their operational runway straight through fiscal 2027.
Oh, that's huge.
Yeah, they have the hard capital required to keep the lights on and actually finish the prototype.
And the prototype they're pouring all this fresh capital into is the Cavorite X7.
Yes, the X7.
This is the intellectual property we talked about. Their primary moat is this patented fan and wing design. And the mechanics of this are quite brilliant. As we mentioned, vertical lift requires all that energy-draining downward thrust. Think of a drone trying to hold itself in the air, right?
Right, it's just buzzing constantly.
Yeah, it has to constantly spin its rotors at maximum capacity just to fight gravity. But once the Cavorite X7 reaches its cruising altitude, it literally closes physical covers over the lifting fans that are built directly into its wings.
It's so cool.
It physically transforms mid-flight from a hovercraft into a traditional aerodynamic airplane.
Which completely flips the energy equation in their favor. Once those fans are closed and it enters forward, wing-borne flight, it uses the natural aerodynamic lift of the wings to stay in the air.
So it's gliding, basically.
Exactly.
Yeah.
This allows it to just sip power to maintain forward momentum rather than constantly fighting gravity with brute force. In fact, an independent engineering audit actually evaluated this flight profile and concluded the Cavorite X7 will operate at an estimated 97 cents per available seat mile.
97 cents.
Yeah. For context, that is a staggering 75% cost reduction compared to the operating cost of legacy twin-engine helicopters.
And because it's a hybrid system,
Yeah.
it doesn't just save money in the air, it saves billions of dollars on the ground, too.
Oh, absolutely.
Because a pure eVTOL needs specialized, high-voltage ground charging infrastructure at every single landing pad. Like, you can't just plug a commercial aircraft into a standard wall outlet.
You definitely can't.
But New Horizons aircraft, on the other hand, can land at any rural hospital, a remote mining camp, or a forward-operating military base, refuel with standard, widely available aviation fuel, and take right back off.
Exactly. It makes the platform massively scalable on day one. You don't have to wait for local governments to upgrade the electrical grid or build multi-million-dollar charging stations in the middle of nowhere for this aircraft to be commercially viable.
Yeah, but having a brilliant blueprint and a scalable platform is one thing. Execution is what ultimately drives valuation.
Yeah.
That brings us to the catalyst timeline.
Right, because the next 3 to 6 months are absolutely critical for setting the tone.
We have the upcoming Q4 and fiscal year 2026 earnings ending May 31st. Though calling it an earnings report is obviously a bit of a misnomer since the top line will be exactly zero.
Yeah, zero earnings.
So if you are tracking this stock, you must strictly look at the cash burn rates. Are the engineering costs accelerating faster than they projected? And crucially, you have to look for tangible updates on their R&D progress. Are they actually hitting the physical build milestones they promised?
But beyond the quarterly filings, the biggest near-term catalyst is actually a massive macro shift in the market.
Oh, right.
We are seeing real, undeniable fatigue across the broader market regarding the overly optimistic timelines of those pure electric eVTOL companies. Investors and commercial operators are finally waking up to the fact that the regulatory and technological hurdles for pure battery flight are massive and heavily delayed.
It's just not happening anytime soon.
No, it's not, and that fatigue heavily benefits New Horizons' hybrid narrative. Operators in remote areas, defense logistics, and emergency medical services are realizing they simply cannot wait another decade for battery tech to mature. They need practical, long-range, vertical lift solutions right now.
And that urgency is fueling some very interesting speculative rumors on the street, honestly. The market is basically waiting on pins and needles for potential announcements regarding new defense or emergency medical service contracts or even strategic partnerships that go beyond just basic parts manufacturing.
Absolutely. Because in this sector, a contract isn't just about projecting future revenue. It's a profound third-party validation of the technology.
Validation is everything.
It really is. If a major defense contractor signs a letter of intent for 50 of these aircraft, or a regional air ambulance fleet commits to a purchase, it acts as a massive re-rating catalyst. The valuation model for the entire company changes overnight. And management clearly knows this, which is why they are engaged in aggressive, ongoing investor outreach. They've been doing high-profile interviews on Bloomberg TV, deliberately trying to hammer home this pragmatic hybrid advantage to institutional buyers.
But, the fundamental narrative is compelling, but the price action tells a story of extreme anxiety. Now let's pivot to the chart.
Oh, yeah. The technicals here are a direct, unfiltered reflection of a market trying to price a binary outcome. Massive success or total failure.
The volatility is just staggering. The 52-week range is a vast chasm. It spans from a low of just 45 cents all the way up to over $4.
Huge swings.
Looking at this chart, it's giving me anxiety. It literally looks like the EKG of a patient in the emergency room. You have these violent, erratic spikes, like the massive 58.27% jump over just 30 days leading right into that recent capital raise.
Right.
But then, almost instantly, a sharp 21.71% single-day flatline drop, the exact moment the $20 million offering was officially priced. It is a textbook example of extreme price action driven entirely by a company's survival capital needs.
But the psychology behind that price action is what you really need to pay attention to. What happened after that massive drop? When the capital raise actually officially closed, the stock hardly moved at all.
Right, it stabilized. So what does that signal to you as an analyst?
It strongly signals that the market fully priced in the heavy dilution of those new shares during that initial 21% shock. The panic was immediate, but then it settled. It means the stock isn't going to just float higher on speculative retail momentum anymore.
It's grounded now.
Yeah, the market has fully digested the new, much heavier share count. So for the stock to break out of this current holding pattern and find sustained upward momentum, it is going to require real, fundamental catalysts. The market is done guessing. Now it wants to see the prototype. So what does market sentiment look like?
Well, quantitatively, it's cautious. If you track the recent news flow,
Yeah.
the algorithmic alpha feeds analyzing their direct offerings, and those investor webinars we mentioned, the sentiment scores are coming back strictly as neutral.
Makes sense.
The overall mood is cautiously optimistic, but they are incredibly sensitive to execution risk. One delayed part, but one failed regulatory test, and that sentiment could crash.
But qualitatively, they have a massive ace up their sleeve that provides some serious gravity to their corner, their collaboration with MHIRJ.
Yeah, let's explain why that specifically de-risks the project. Because MHIRJ isn't exactly a household name for everyone.
Definitely not.
MHIRJ is a subsidiary of Mitsubishi Heavy Industries. They are an absolute titan in the global aerospace engineering world. And New Horizon is collaborating with them specifically for engineering and flight test instrumentation.
Which is huge.
In the aerospace startup world, there is a dangerous tendency to get trapped in an internal engineering bubble where your own team tells you everything is fine.
Drinking your own Kool-Aid.
Exactly. So bringing in Mitsubishi Heavy Industries means you are subjecting your flight test instrumentation to the most rigorous legacy safety and validation standards on the planet. You have one of the most experienced aerospace companies looking over your shoulder, validating the data.
Exactly. It proves the engineering isn't just a science project in a warehouse, and the analysts are clearly factoring that validation into their models. The prevailing narrative among analysts right now suggests a fair value of $3.50.
Wow.
Yeah, and given its recent close around $2.20, that implies the stock is roughly 37.1% undervalued today. And if you look at the highly bullish end of the spectrum, there is an extreme target sitting out there at $8.52.
But the most telling sentiment indicator isn't the analyst price targets, it's the institutional money flow. We mentioned that $19.9 million capital raise earlier.
Yes.
Every single penny of that was absorbed entirely by institutional investors. That is not a bunch of retail day traders throwing money at a meme stock.
No, it's not. Institutions do not hand over $20 million to a pre-revenue aerospace company based on a nice PowerPoint presentation.
Definitely not.
That kind of investment proves that heavy, rigorous engineering due diligence has been completed by someone with a very large tech book. They sent their own aerospace experts in to kick the tires, review the patents, analyze the blueprints before they wired those funds.
But even with institutional backing, aerospace is a notorious minefield. Now let's talk about the risks.
Because the bear case here is very loud and very real, and we cannot look at this without addressing the elephant in the room.
The loudest risk by far is extreme dilution.
Yes.
Pre-revenue aerospace is a black hole for capital. Developing a brand new category of aircraft costs an absolute fortune, making every single fundraiser a mini referendum on the company's survival. Adding 9.2 million shares to the float is a massive dilution event that permanently shrinks the value of existing shares.
It hurts current investors.
And let's be totally transparent.
Yeah.
The company explicitly warns in their filings that they will very likely need to raise even more capital in the future. The threat of a dilutive spiral is always hanging over a stock like this. Your slice of the pie is going to keep getting smaller as they fund the journey to the finish line.
That is the harsh reality of doing business in aviation. And layered right on top of that capital risk is the massive execution and certification risk. The entire bullish thesis, the reason those institutions wrote the checks, is completely dependent on finishing the full-scale Cavorite X7 prototype by late 2026, and then successfully beginning flight testing by early 2027.
The timeline is razor thin. If there is a supply chain issue for a critical component, or an unexpected engineering setback, or if regulators just drag their feet on red tape, it delays those milestones. And any delay absolutely crushes their newly extended funding runway.
And we also have to remember that the incredible economics of this aircraft, that 97 cents per seat mile operating cost, is entirely theoretical at this point.
Exactly. It's an engineering estimate generated in a highly controlled environment. It sounds phenomenal, but it means absolutely nothing until it is proven in real-world validation.
Right, like how does the complex hybrid system hold up under severe weather conditions?
Yeah. Or what happens to maintenance costs when the moving fan-in-wing mechanism is exposed to dust, ice, and thousands of cyclical deployments. Often, theoretical costs balloon by 20% or 30% once regulators mandate heavier safety equipment. Until that aircraft is flying actual routes with real passenger loads, those efficiency numbers are just educated guesses.
So with everything on the table, what's the final verdict?
Well, you looked at the models.
Yeah, and based on the research and the balance of their technological promise versus the severe capital and execution risks, we were looking at a bullish score of 6 out of 10.
Okay, 6 out of 10.
It is firmly framed as a high-risk, high-reward speculative buy. From a long-term investment view, you have to treat this strictly as a multi-year hold spanning the entire certification process through 2026 and 2027. The true value unlock does not happen in the near term. It happens when that full-scale prototype is completed and completes successful, verifiable flight tests. If you are entering this position, you must have the stomach to weather near-term dilution volatility while waiting for those binary engineering milestones. If they fly, the valuation paradigm shifts entirely. If they don't, the downside is severe.
But here is a final thought to chew on before we wrap up. If New Horizons successfully builds this and proves that hybrid electric, not pure electric, is the true pragmatic bridge to the future of flight, what happens to the billions of dollars currently locked up in pure electric eVTOL companies?
Oh, that's a fascinating thought.
Right? If the market suddenly realizes batteries won't work for another 15 years, we might be looking at an imminent massive pivot of capital across the entire aerospace sector, flowing straight into hybrid solutions. And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is grow $100 to $10 K of DIK with VIP indicators, and their tools include TradingView indicators, market alerts, and trading education with up to a 93% win rate. But trading always carries risk, and no profits are guaranteed. Use the tools for education and analysis, manage your risk carefully, and always do your own research before making any trade. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath it. We'll see you in the next Smart Wealth with Joshua episode.